30 days of stock market tips. Tip number 1. Cut your losses quickly. I cannot emphasize the importance of cutting your losses quickly when a stock is going down in value. Make sure you have your entry and exit strategy there at all times, no matter if you're trading or investing on the stock market. It's better to lose $1,000 than it is to lose 10,000. 30 days of stock market tips. Tip number 2. Don't use the share price as a way of evaluating the worth of a stock. Instead, what you want to do is look at the market cap of the company. And effectively what this is the number of shares on issues times the current share price. And that will give you a valuation of what the company is worth to the market. Then what you can do, for example, is look at the balance sheets and say they've got $10 million on hand, no debt, but the market cap's $5 million. In theory, that company should double in price. 30 days of stock market tips. Tip number 3. If you're day trading, make sure you're only day trading stocks which have high levels of liquidity. You want there to be a large volume of shares being bought and sold on the market for that share so that you can enter and exit the stock and position yourself accordingly. If you trade a share which does not have a high level of liquidity, you could risk getting stuck in a trade and ultimately losing money. 30 days of stock market tips. Tip number 4. Check the debt levels of a company. This can be something which can absolutely cripple a company and potentially cripple your investment. What you want to do is look at their level of debt and how they're going to tackle it. If they don't have any clear plan in place in order to pay off the debt, then I suggest you get out of that stock very quickly. 30 days of stock market tips. Tip number 5. Put in place trailing stop losses for your trades which are in profit. What you're effectively doing is allowing your stock to run and keep going up in value, but mitigating the potential lost earnings by putting a stop loss in place that follows the share price as it increases. 30 days of stock market tips. Tip number 6. Diversify your portfolio. Diversification of your portfolio is extremely important. The last thing you want is for all your eggs to be in one basket. In a stock you think's going to do really well, you've got 100% of your capital, the majority of it in there, and then all of a sudden the stock price absolutely plummets and you destroy your portfolio. So make sure you put your money across multiple shares. And that's not to say that you have to invest in different industries, but instead, for instance, if you're investing in mining companies, invest in different types of minerals. 30 days of stock market tips. Tip number 7. Make sure you take appropriate position sizes based on the risk profile of the share you're investing or trading. If you're investing in a more riskier share that is very illiquid to trade, then you want to take a smaller position so that you can exit the stock quickly, as opposed to something which is a bit more safer and you're going to invest longer term. You can afford to enter a position which is a lot larger. 30 days of stock market tips. Tip number 8. Make sure when you're choosing a stock to look for a strong management team. This is something you won't hear too often, but I've found from my experience is one of the most crucial elements in determining the long-term success of a company. Not only are you looking for directors with a good history and experience, you're also looking that the directors have skin in the game, that they've bought shares in the company with their own personal money. And that effectively gives them a personal reason for the company to succeed. 30 days of stock market tips. Tip number 9. Dealing with unexpected news. This can be a big one and can cause people to act out on emotions and make poor decisions. Effectively, what you want to do to manage this is have a clear strategy and plan in place. Know your entrance, know your exit, and know exactly what the reason is you've invested in a company for. If the fundamentals have changed due to this announcement for the worse, then potentially you need to consider selling the share. 30 days of stock market tips. Tip number 10, keep up with the current affairs going on throughout the world and within the economy specifically. Fluctuations in prices of materials, demand, supply, and other global events can significantly impact the value of a company, their share price, and as a result, your investment. 30 days of stock market tips. Tip number 11. Don't get caught in pump and dumps. You'll often see a lot of hype on Twitter, on forums, and other forms of social media where people are absolutely going on and on about certain shares, and there's no real basis for them to do so. And often you'll see that the things they're talking about are too good to be true. So be careful of these, because their intention is to effectively get you to invest and then sell at a high price, and as a result, leaving you with a loss. 30 days of stock market tips. Tip number 12, keep a journal of all your investments and trades. What you want to do is effectively put in the stock code and the reason you bought into the stock in the first place. What this allows you to do is reflect back on your previous investments and trades to see what worked well and what didn't work so well, so that you don't repeat the same mistakes again. 30 days of stock market tips. Tip number 13, don't be greedy when you trade. The worst thing you can do is hold onto a stock when you're in a significant amount of profit and then see those profits absolutely disappear because you didn't exit at the right time. Make sure you put in place your exit point, and if need be, put a trailing stop loss in place so that the stock can continue to increase in value, but when the reversal eventually occurs, then you get out. The worst thing you can do is not take profits. At the end of the day, a small profit is better than no profit at all. 30 days of stock market tips. Tip number 14, learn technical analysis. It's all well and good to understand fundamental analysis when you're long-term investing, but if you are day trading and making shorter term trades, technical analysis will help you in order to predict the price action. What you want to do is learn different kinds of charting patterns as well as the different kinds of indicators and what they mean in order to determine where the price is going to go next. 30 days of stock market tips. Tip number 15, learn how to gap trade. This is an incredibly powerful technique that you can add to your arsenal of technical analysis tools. A gap effectively forms between two different trading days where the price of a share does not trade between two certain points. So for example, if a stock closes at $1 then opens at $1.20, the gap occurs between $1 and $1.20. And what you'll come to learn is that a gap always closes. So effectively, you want to wait for that gap to close and for the price to trade at the $1 mark again and plan your entry there, and then see the money come rolling in.